Hello everyone, thank you for joining us today and welcome to this educational presentation where I'll be introducing our new Elite Forex Trading College. I'm excited to be talking about this college because it's almost been 2 years since I gave my last Forex College where I go over in depth all the different ways in which to trade the Forex currency pairs. Now today I'm going to actually give you 3 of the key strategy rules to one of our best in terms of consistent strategies that I'll be teaching in the class. Let me show you a current example of how these key rules came to play in a really nice buy signal. This buy signal was actually generated in the Canadian dollar a few months ago. Now with the 3 rules I'm going to be sharing with you today, you'll see how they could have been applied to this particular scenario, and you would have actually generated, just off of this bar alone, a buy setup. And being able to take advantage of that, potentially you could have captured roughly up to 395 pips coming into July and August. So you're all going to learn how simple it is to apply these 3 key rules, and you're also going to see how simple it is to apply on our new platform. This is the PTS Primo Charting Platform I developed with Pro Trader Strategies. It's the educational platform that teaches you how to trade. You're going to see how simple it is. Everything is basically one click away. So thanks for joining us today. Welcome. My name is Steven Primo. I'm the president and founder of Specialist Trading. If you're new to my webinars, we're all about educating you. That's our only goal. I teamed up with Pro Trader Strategies around 9 years ago with one goal in mind, and that's simply to educate traders, because we feel that's the one thing that's really missing. The reason why you're failing is not so much that you have a poor strategy or you don't have enough experience, you don't have enough education in terms of what you feel is necessary, but what we feel is necessary is entirely different, and that's based on simplicity. Simply finding everything you need in the chart right in front of you. Now, I've been trading for 41 years, and I've been using these same things that I teach in my courses in my own personal trading. So if they work for me, they should be able to be applied to your trading and help you to become a consistent trader. Now, even though my background is in stocks, I started trading on the floor of the stock exchange, everything can easily be transferred over onto the Forex currency pairs. I'll show you just how simple that is today when we apply these 3 simple rules. But before we begin, as always, we are first required by law to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using these 3 rules that you can apply to your currency pair trading, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also please remember that all examples are strictly for educational purposes only. So as you're taking a brief moment to view our disclaimer, once again, I'd also like to invite each and every one of you to follow us on Twitter. You may want to copy down our handle right there. It's an abbreviation for Specialist Trading. Every day I post different educational information, anywhere from little bits of financial wisdom to actual signals that our strategies have generated. In fact, I generated a few really nice currency pair strategies about a week or so ago. So feel free to follow us on Twitter. Okay, so once again, as I stated in the opening statement, the reason that we are different and what separates us from other companies is that our only focus is on educating you. As you can see here, my goal is not to force feed you signals. My goal is not to tell you that we have the perfect system that never fails. My goal is not to have you come nightly to my website so you can figure out what to do tomorrow. We don't believe in that. We believe actually that that's the reason why most Forex traders fail, is because you're basically not making your own trading decisions. But once you have the proper education, once you've been mentored and taught, once you've been taught how to actually trade with the Specialist Edge, then you'll be able to be in charge of your own trading destiny, and you can make your own decisions for the first time and get on that road to consistency. In my 41 years of trading, this is the only way I've found that anyone can become a consistent trader. It's not by going to a chat room every day and following what they're doing, and not by listening to some trading guru or waiting for news events to occur. It's simply by looking at the chart, applying what you've learned, and then making your own trading decisions. So as you can see, my goal is not to trade for you. My goal is to teach you how to trade with the Specialist Edge. This is the same edge that was taught to me some 4 decades ago, and what I truly believe has been able to sustain me now for going on 41 years. So hopefully it will be able to do the same for you. Okay, so since this is an educational webinar today, I want to take all of your questions, but if we take every question, we'll be here far too long in the day. So before we begin, just let me make a note of that. If you have a question, please wait till the end of class, okay? Then I'll answer the questions then. This won't be a real long presentation, so don't worry. And many times if you wait for the next slide, the question will be answered. But if you have a question, please wait till the end of today's class. The only question I will answer is the most common, and that is this being recorded? Yes, it is. So if you're having technical difficulties or if you have to leave early, we will send each and every one of you a link to this recording. Okay, with that said, let's start. And I want to start off by sharing with you what I learned trading on the floor of the exchange. Remember, my background is in stocks. I worked on the trading floor. But even though I focused on stocks in my early part of my career, everything I learned is easily transferred onto other markets, other time frames, and it's just as important. It's just as valid because these are the basic tenets of trading, okay? So here's what my mentors taught me. These were my teachers when I was struggling. My first year, I struggled tremendously. I was doing everything I had been taught that most likely you've been taught as well. For example, you're probably taught that in order to trade the Forex markets, you need to look at a lot of fundamental news and see what's going on economically with each country or what's going on with their particular currency pair, because that will tell you which direction it wants to go, right? I was taught the same thing. Or you've probably taught that you need to find out what the big money is doing, what the institutions or the big brokerage houses are doing, because they're the ones driving this real long trend, right? I learned the exact same thing. Or you've probably learned that, that chat room or that trading room where that great guru goes to and he generates signals is where you should get your ideas from, because after all, this person knows more than you do. So that's where you should go to get your trading ideas from, right? Well, trust me, 41 years ago, I was taught the same things. And trust me, I struggled tremendously doing most likely the same things you're doing, except that I did them 41 years ago. And they didn't work for me then, so they're really not about to start working automatically right now. The reason why they really don't work is because there's no consistency based in those ideas. See, we're looking to become consistent traders, all right? We're not looking to become millionaires overnight, because I knew tons of millionaires that worked on the floor that made hundreds of thousands, if not millions of dollars, and then lost it all. So there's really nothing valid about that type of trading. We're not trying to promote a fly-by-night system that makes tons of money one year but then loses it and more the next. I mean, what good is trading then? So this is what I learned trading on the floor of the exchange, and here's what I'd like to pass on to you today. In order to be a successful trader, successful trading means that it should be non-subjective, okay? In other words, two traders looking at the same chart, looking at the same Forex currency pair, should come up with the same analysis. How many times have you had an idea about the Australian dollar or the euro dollar and someone else has the exact opposite idea, all right? Well, that's subjectivity coming into play. Everyone has a different idea. But once you learn the basic format, and you're both students of mine, you should both look at that and know exactly whether you're a buyer with a buyer's bias or a seller with a seller's bias. And then you start looking for details on how to get long or short. Now, secondly, successful trading should be consistent. This is what we talked about a few seconds ago. We don't want to swing for the fences and hit home runs. What we want to do is have a two-step forward, one-step back approach, because consistency will have you trading down the road 10, 20, 30, 40 years. Remember, a fly-by-night system will have you maybe having a great year and then give it all back. And we don't want to do that because, what good is it if you have a great trading year and then you don't have enough capital to continue trading the next? So you want to have a method that tries to hit singles, these small little profits, so that they ultimately generate into large ones and you can be trading for a long time. A two-step forward, one-step back approach. Now, successful trading should also be as simple as possible. Now, look at it. I did this myself when I first started trading. But if you look at it, most traders who've been trading a relatively short amount of time, and that's 5 to 10 years, that's really a short amount of time, have these very complicated trading plans, a lot of convoluted indicators, a lot of rules that need to be met, a lot of things requirements that have to be met here and there, and they're very complicated. All right, my trading was the same way when I first started out. I was looking at far too many things, had tons of indicators on the screen. It was a wonder that I ever, traded, because so many things had to line up, so many rules and requirements. All right, if you look at traders who've been trading a long period of time, relatively 30, 40, even 50 years, their trading plans are extremely simple. Maybe 3 to 5 rules tops, maybe one indicator. That's it. All right, so this is what we want to be. This is what we want to strive for. That simplicity. Look at your own trading plan right now. Is it extremely complicated? Are there too many rules and requirements that need to be met? This is what's keeping you away from your consistency. And then lastly, and most importantly, my mentors taught me that successful trading should make you a part of the process. Most traders do not involve themselves in the process. Here's what most traders do. They say, well, I'm going to read that blog on what that trading guru says, what he thinks is going to happen in the market. Or I'm going to wait for the economic numbers to come out before I make a decision. Or I'm going to wait for these tons of indicators to cross and tell me what the institutions or the big houses are doing, the brokerage houses, before I can make a decision. You see, you're relying on someone or something else to tell you what to do. And you should never do that. That's a recipe for disaster. What you should be relying on is the one thing you're staring at, and that's the chart in front of you. Not me, not someone in a chat room, not some indicator, but the chart. Because the chart is the source of your income. It's the source of where your profits or losses are coming from. So that's where you should be studying. Okay, so this is what we do at Specialist Trading and Pro Trader Strategies. We teach you so that you can become a part of the process and be in charge of your own trading for the very first time. Now, this is what we're going to be doing in the college, all right? Everything I just talked about that can make you a consistent trader is taught in the college. Week 1, we talk about the foundation and the building blocks of Forex trading. This is the basic philosophy and the concepts of our philosophy or our style of trading, all right? In week 2, we start going into our most consistent strategy to date. That's Forex strategy number 4. In week number 3, we go into another strategy. That's our candlestick strategy, strategy number 5. Week number 4, we go into our probably our most popular as well as powerful tool. That's the PET-D. I'm showing you a number of ways in which to apply it, how you can use it on your strategies, or you can use it by itself, okay? Week 5, we see how we can use all these different things on a new platform, how everything is one click away. Years ago, when I used to teach this college and all of our colleges, we didn't have our platform, so everything had to be done by hand. You had to kind of memorize and learn everything and know where everything is. Now, we still want you to know how to apply these tools and techniques, but then we give you a way in which to check your work, in which to find out whether you're in sync with the strategy rules or not. One click away, everything is right there on our platform, okay? And then lastly, we go into some techniques that I only discuss in our college, and that is the advanced trade management. Once again, another thing I learned on the floor. It's a proprietary technique that is really designed to elevate your trading to the next level. And we put it all together by answering all your questions. Now, this is a 6-week course with yours truly where I teach you all of this, but it just doesn't end after 6 weeks. You're always going to be a student of mine, and you can always have mentoring correspondence with myself through my email, all right? Now, today I talked about the 3 strategy rules. They're going to be applied to Forex strategy number 4, okay? So I'm going to share with you what these rules are because they make up the core of strategy number 4. And strategy number 4 actually only has about 5 rules altogether. I'm going to give you 3 of them today, okay? So you're going to get over half of the core of strategy number 4. Unfortunately, I can't give you all of the rules. That wouldn't be fair to the people that have actually purchased Forex strategy number 4. And plus, you wouldn't want to join the college and become a student of mine thinking that you already had everything you needed already. But I'm going to give you a great taste of what strategy 4 is like and how simple it is and how it can generate some really nice setups. Okay, so strategy number 4, once again, is our most consistent strategy. It's virtually for all students, from beginners to advanced. So I don't care if you've only been trading for a couple of weeks, or I don't care if you've been trading for 20 years. Everyone is going to get the same basic format, and then we work out from there because our philosophy is that no 2 traders should ever trade alike. You see, systems require that everyone trades the same way, that everyone buys at the same place, everyone sells at the same place, everyone buys this exact same amount of lots or currency pair lots or futures. It makes no difference what market you're trading. Strategies are different. Strategies are about 60 to 70% rule-based, but we have about 30% for discretion. And discretion means your own insight. This means if you want to trade aggressively, if you like to enter at an aggressive place, or if you'd rather be more conservative, if you'd rather have a conservative stop placement, if you'd like to exit for a quick in and out trade, or if you'd like to stay in longer. You see, this should be the process that you're looking for so that you're in charge of the decision making, not someone else. So we give you all the basic format, and then we give you odds and ends, different variables so that you can decide for yourself. So it does not matter if you're a hedge fund trader. It does not matter if you've been trading a couple of days. Everyone gets the same format, and then we work out from there to meet your needs. Now, Strategy 4 was originally designed for traders looking to catch quick momentum moves, but we have ways in which to stay in the trade longer if you like. If you like to be in there for a couple of days, a couple of weeks, even a couple of months, we can show you how to do that. It's a pattern recognition strategy, all right? So we're looking for a specific pattern. I'm going to give you 3 of the rules today, but I can't give you all the rules for this specific pattern, but it's that simple. Now, its intensity level, if 1 was the most intense of all strategies where you couldn't even leave your computer, and 3 was the most relaxed where you just enter an order and walk away for a couple of days, it's a very moderate number 2 type of intensity level, okay? Now, our edge here is consistency. What does that mean? It means not every trade is going to be a winner. That's okay. Remember, if you have a consistent method, that's a 2-step forward, 1-step back type of philosophy. So the 1-step back means that you will have losses from time to time. 2-step forward means that you have a method that you feel confident in that's able to recoup those losses. So that's what we're searching for. I'm not going to sit here and tell you that strategy number 4 never loses, that it's generated 1,010% the last 20 years, because that's a system. Remember, we encourage everyone to trade differently. So there's no statistics, there's no stats going back 20 years, because on what market, on what time frame? What if you want to trade aggressively? What if you want to trade conservatively? We encourage everyone to trade differently. So we're not going to keep stats on all of our, thousands of members around the world in over 115 countries and in virtually every state in the United States. You've got to find what works for you, but we're here to help you do that. Okay, with that said, that's the basic highlights of strategy number 4. Let's look at the indicators, all right? Our basic indicator is the buy-sell line. You've heard me speak about it before. I've gone over webinars talking about how powerful the buy-sell line is. If you're not familiar with it, don't worry. It's simply the 50-period simple moving average. That's it. That's the only indicator you're going to have. Remember, strategy 4 is a pattern recognition strategy. So we're looking to find a pattern, and this 50-period moving average will help us. All right, so here are the 3 rules. Don't worry if you feel like, hey, Steve, you went too fast. I didn't get to copy all of these down. Remember, we're recording this, and we'll send you all a link out to this recording so that you can get these rules later. Don't feel if I skip over them too fast, you didn't get to write them all down. But I'll show you how simple they are, but how powerful they are at the same time. Now, this can be applied to all time frames, and you'll just reverse this process for selling, okay? Okay, for buy setups, the closing price of the currency pair must be above the 50-period moving average, okay? Now, it'd be ideal if all the bars and all the wicks and everything were above, the range was entirely above the 50-period, but all we really need is that the closing price of the bar in question is above the 50, all right? This is for buys. Obviously, if we're looking at sells, it would be the opposite, and the closing price must be below the 50. Now, rule number 2, we're going to look to buy when a price bar closes in the top 25% of its range. This is going to be our setup bar. So you simply take a bar from top to bottom, divide it by 4, and if you close in that top 25%, that top quarter, that's a setup bar, all right? Now, it doesn't mean that, okay, well, I just simply buy at the market, right, Steve? No, we're just simply setting up for a buy. There are still some other rules here, which takes us to rule number 3. We are going to buy when price trades 1 to 3 pips. It's your decision. Some of our students like to wait for 1 pip. Other students wait for 10 pips. But basically a minimum of 1 to 3 pips above the setup bar's high. Now this must happen on the next bar or the trade is negated. Now this is part of the basic format. Remember, all this is subject to change if you want to. But as long as you keep it within the benchmark rules. In other words, if you said, Steve, I don't want to wait for a price to trade 1 to 3 bars above. I kind of, actually I'd like to wait longer. I'd like to see it trade at least 10 or 12 pips above. That's fine. You can do that. Or some students would say, well, Steve, I don't feel as if I want to be restricted that the trade must happen on the next bar. What if I wait 2 to 3 bars? Okay, that's fine. Go and research that and see if that works for you. But what if someone says, well, Steve, you know what? I don't want to enter waiting for price to trade above. I want to wait for the earnings to come out, and that's when will give me the confirmation. Well, we don't, earnings is not required in any of our courses, or not earnings, economic reports, So they're not required. Fundamental news is not required in anything that we trade, stocks, Forex, futures. So that's something that's out of the realm of what we talk about. So those are the things that when we say subjective or discretionary, we don't want to include because we're not talking about that. Or if you said, well, Steve, I'll buy the currency pairs once I find out what the big brokerage houses are doing, okay, around Europe and the United States. Well, that's not required either. We don't need that in order to make a decision. So as long as you stay within the basic framework of the philosophy of the strategy, it's okay to mix and choose, edit and alter. That's okay, all right? Now, let's take it step by step so you get a clear idea of what this is. And remember, we have a good crowd here today. If some people happen to join us later, please remember to ask questions at the end. I'll get to all the questions at the very end. Okay, step number one. If we're going long, price must close above the 50-period moving average. So if we look at that example I shared with you at the beginning of the presentation, the Canadian dollar, we see here that we're kind of going sideways. You have a nice blip up, but then we have a blip down. Most traders will say, well, Steve, there's nothing really to notice here. But yes, there is. There actually is a clue that's coming not from some news source, not from some blog that you read, but it's coming from the chart in front of you. Why? Because you add the 50-period moving average. And where is price? Price is above. The last 6 to 7 bars have closed above the 50-period moving average. So that's all we need to tell us that the overall trend is up. So if the overall trend is up, we're only going to be a buyer. We're only going to have a buyer's bias. So right off the bat, you've got so much more information than someone waiting for an economic report or someone waiting to hear what's going on in the chat room. You already know you can make your own decision. Say, well, if anything happens in the Canadian dollar, I'm just going to be a buyer. Now, it's still not enough to simply jump in and buy. You need a little bit more structure. But you've already eliminated, half, 50% of the decision-making process because you know you're coming from a buyer's bias. See how simple trading is when you know how to listen to the chart as opposed to waiting to figure out what an economic report means? That's the way I was taught, and that's why I couldn't make any money. And my mentor said, Steve, it's just too complicated. Make it simple. First thing you want to do is apply a 50-period moving average, the buy-sell line. Okay, now that we have rule number one, let's go on to rule number two. Look to buy when a price bar closes in the top 25% of its range. This is probably the number one thing that most students have difficulty with. So let me just share with you on a generic bar what that means. Now, it doesn't matter if this is a monthly bar of the Canadian dollar or a 100-tick bar chart of the Australian dollar. It makes no difference. All that matters is that that's the top 25%. If you divided this by 4 separate equal parts and you closed in the top quarter, that's what we're looking for, okay? You're above the 50-period moving average, and the bar, whatever time frame, whatever market you're looking at, closed in the top 25%. So as we look back at the chart here, we see that, well, there are a number of bars that close there. But remember, we can't give you all the rules. There are still 2 more rules that we can't divulge. But let's just say we're looking at this last bar here, and we closed in the top 25%. All right, so this is our setup bar. We're setting up for a buy signal, but we still haven't confirmed it yet. We've labeled it our setup bar, but we need one last rule here according to the 3 rules I'm giving you, and that's our entry. We're going to enter to buy when price trades 1 to 3 pips. It's either up to you. It could be more, could be 1. It's up to you, above the setup bar's high. But this has to happen on the next bar because remember, we're looking to catch momentum. If we wait around too long, it's just not going to have as much power behind it. So we want it to happen on the next bar or else the setup is negated. Now, this is the standard format. Remember, you're always free to pick and choose different entry points if you like, and we teach you those in the course. So this is where we want to enter. Let's say it's 1 pip above the high of this bar. And look what happened. We did enter. We entered the very next day, all right? This is a daily bar of the Canadian dollar. Now, some would say, well, Steve, we didn't close above there, so why would I enter? Remember, the rule does not state it has to close 1 to 3 pips higher. It just says it has to trade there. That's the standard format. Now, if you want to do your research and say, well, Steve, I'm going to wait for it to close up there, that's great. That's fine. You're not altering the basic philosophy of the strategy so that you can do that. This is why we say you have 30 to 40% discretion that you can use. You're in charge of your trading. Some of our students like to say, it trades 1 pip and I just simply buy and I don't care. Other students say, well, I need it to trade at least 3 or 4 pips and it has to close 3 or 4 pips higher for me to buy. There's nothing wrong with that either. That's why nothing is back-tested or researched because everyone trades differently. We encourage this. This is how you become a consistent trader, by following your own rules, not by following someone else's. So as you can see here, this didn't close above. That's okay. Why? Because the market, because it traded above the previous bar's high on the next bar, it's telling you most likely it wants to go higher because there's momentum there, okay? And as we can see, there was momentum. It took a little while, it took a little week or so for it to take off, but eventually it went up nearly 400 pips into the next month. Not a bad setup for just following 3 rules. Now, there are still 2 other rules that we didn't explain. Once again, those are the final rules of strategy number 4, but I just can't divulge them right now. All right, so let's look at some recent strategy number 4 trade examples, okay? Using the 3 rules we talked about, and then we'll show you what else is included in our Forex College. All right, we're looking at the British pound. This was just a week or so ago in October. We see here that we have the 50-period moving average. Now, ultimately, price was above. Then we had one bar close below, but then we bounced back up. Remember, the rule states that we just need the bar to close above the 50. Sure, it would be more ideal if all the bars were above the 50, but that's all right. We just need the bar in question to close above the 50. And it does, all right? Our second rule is it has to close in the top 25%, which it did. So our platform automatically generates a buy setup bar. It does not say you have to buy there. It's just saying that that is a valid setup bar, and we're going to buy if we trade 1 to 3 pips above. So you see how the platform makes it simple for you. If you can look at a bar chart, you can say to yourself while you're studying and paper trading, you say, I think this is a buy signal. All you have to do is click on the green strategy tab up here, strategy number 4, and click on signal arrows, and you'll see automatically if you're right or wrong. Because if that is a valid setup, a green bar or green arrow, excuse me, will be generated. And as you can see, it was. So that was a valid setup on the 3rd. That means that on the 4th of October, we'll go long, but only if it trades through there. As you can see, it did. So we went long the British pound on the 4th. Okay, it's just a couple of weeks ago. And as you can see, 205 pips in the first week. Would you have liked to take in that trade? You could have been in charge of your own trading destiny. You would not have had to go out to some chat room. You would not have had to wait for news. You could have made the decision to go long based off the information we've taught you. How about this example in the Australian dollar? This was about a month ago in September coming into October. First thing you want to ask yourself, where is price in relation to this 50-period moving average? It's below it, right? So what is that telling you? Not what I'm telling you, not what the institutions or the brokerage houses are telling you. What is the market telling you? Remember, we're learning how to listen to the market. The market's telling us that the overall trend is down because it's below the 50. If the overall trend is down, meaning that overall the market wants to go lower until it tells us it doesn't, should we be a buyer? No, we should be a seller. Unfortunately, we're always taught the opposite. If something is low, you want to buy low and sell high. But take it from someone who tried that 41 years ago. There's no consistency in that. Every once in a while, you will buy low, and it'll be below the 50-period moving average, and it'll work perfectly. But over time, it's not consistent. You won't have a consistent method under your belt, and you'll most likely give away more than you'll make. It's much easier to swim with the current at your back. I always say that. Trading is like a river. You want to simply have the current at your back, and it's much more relaxed, and you'll get down the river a lot quicker and easier as opposed to swimming against the current and swimming upstream. So if the stream wants to go down, in other words, the overall trend is down, we're going to be a seller. We look for a bar that closes in the bottom 25%, and the bar in question is right here, all right? So now we close below, we close in the bottom 25%, we check our work, we click on strategy number 4, and then we click on signal, and it automatically generates an arrow. So we're right. We checked our work. You see, we're learning. We're right because it's automatically programmed in the platform. Great. So if we want, we can go short, but only if we trade 1 to 3 pips below. And it has to be on the next bar. So we wait to see what happens. And guess what? You would have gone short on the 25th of September. Right there. It traded below. And this time it actually closed below. And look what happened. 2 weeks, almost 200 pips to the downside. All done without the aid of having to pay for some signal service, without the aid of having to pay thousands and thousands, $10,000, $20,000 I've had former students tell me they spent on the market trying to get information or ways in which to get a master system. I had a student tell me they spent $25,000 on systems and they hadn't made any money yet. And, you know, I did almost, not that much, but just about the same amount of stuff, damage done to my own personal trading when I was trading 41 years ago, spending tons of money on systematic programs that I had no idea what they're based off of, hoping to make money. And they didn't work then, and most likely will not work now. Now, the advantage of strategy number 4, as you see here, is that it can be applied to virtually any time frame. Here's a weekly chart of the euro-yen. I wanted to show you this for specific reasons, because nothing changes because we're looking at the weekly chart. We're above the 50. So what's the market telling us? The overall trend is up on this weekly time frame. And we're looking for the same things for bars that close in the top 25%. And look at all the signals that were generated along the way. Do you think you could have taken advantage of any of these? Now, had you taken the very first few that were here in the left-hand corner in June of 2017, that's 1,300 pips in 8 months that potentially you could have captured, okay? So nothing changes because we looked at a weekly chart. In fact, that's the euro-yen, but if we go to a 4-hour chart of the euro-yen this past month, nothing changes as well. As you can see, we're above the 50-period moving average on this 4-hour chart of the euro-yen, so we're a buyer. But once we had consistent closes below, we now have a seller's bias. So this can be applied to any market, any time frame. And as you can see, signals are automatically generated to go long if you're above the 50 and automatically generated to go short if you're below. Now, everyone is not a winner. Obviously, these two were winners, so were these two. This one was not. But that's okay. Remember, it's about consistency. 2 steps forward, 1 step back. If you would have switched once you were below, well, now you would have had a couple of winners here, most likely the loser here, met by more winners, another loser met by 3 more winners. So it's a 2 step forward, 1 step back approach. Not every trade is going to be the best one. And in the course, we show you ways in which to weed out those losses as well, increasing your odds for consistency. Now, one of the best things about what we're going to be teaching you in the college is that these strategies, techniques, and methods work great with currency pairs. But the beauty of them is that they can also be transferred onto other markets, other time frames, most specifically stocks, ETFs, futures, and commodities. For example, let's look at a strategy here. I believe this is strategy number 4. Look at the nice buy signals that were generated in AMD. This was last August coming into September. Could have generated 12 points in 1 month. The same exact things you'll learn in the Forex College. How about an ETF, IWM? This is the ETF for the Russell 2000. Represents 2,000 of the most prominent stocks in the Russell Index, okay? Now, 13 points in 2 weeks. This was at the end of September, coming into the first couple of weeks in October. This massive sell-off we've seen in the last couple of weeks in the market. Guess what? Strategy 4 generated a sell signal well before it was underway. Now, that 13 points, you may think, well, that's not a lot of points. Well, yes, but you could have used this as a market directional tool because that represented thousands of points to the downside in the market. How about crude oil? Okay, same thing. We have, this is actually strategy number 5. The other strategy we'll be teaching you, 2 strategy number 5 signals generated 8 points to the upside in crude oil. So you see how we're covering all these different markets. And lastly, how about E-mini trading? Here's a 15-minute chart of the E-mini. That was, I believe, just about, it was on October 16th. If we look down the bottom left-hand corner here. So this was just recently. A 56-point potential gain to the upside. Look at all the buy signals that were generated, okay? So this is showing you the beauty of this, using these 2 strategies that we talked about. Not to say that you would have made 56 points, but potentially you could have captured 56 points, which transfers over onto roughly $2,800 per contract. Now, we're also including 2 extra bonuses as well in the college. The first one is the ATM, and the second one is the PET-D. So what exactly are these? Well, there are 2 things that I learned on the floor of the exchange that I use on a daily basis on my own personal trading. First of all, the ATM stands for Advanced Trade Management. This is a particular technique that I learned, and it is so powerful. We don't talk about it. We don't teach it. It doesn't even have its own separate course. It's only included in the colleges. That's how powerful this is. And we don't sell it individually or separately. But let me show you what it is, because it's based off of how your strategy is performing. Now, here is an example of a strategy in the euro dollar. This is what we all love. This is our goal. We all love to see this, that every signal that is generated using your strategy is a winner. You see 2 sells here were winners. Another sell was a winner. Then a buy is a winner. So this is what we love, when everything works great. All right. Now let's look at the exact same strategy in a different market environment, using the same strategy on the same market. Now, every trade is a loser. Does this mean that this strategy is faulty, that it no longer works? No, it just means that it's out of sync with the current market conditions. Here's where ATM comes in and is extremely valuable. It can tell you when these market conditions may change or are changing sometimes. And so you can make the decision whether you want to be trading or not. Because if your strategy is out of sync with the conditions, do you want to be trading it? No, it's going to generate losses like this. You want to be out of the market, and that's what ATM does. It's a really powerful technique, and I teach this only in the colleges. Secondly, we talk about the PET-D. This is our most popular tool we have at Specialist Trading. Another technique I learned some 41 years ago on the floor. This, at the time, used to be called the formula. It's a proprietary technique that is a directional tool. We call it the Primo Early Trend Detector. We named it the PET-D because when I was first using it, we just said, what's the calculation for the formula? And so we wanted to give it a better name than simply the formula. It's a proprietary color bar algorithm. We've taken all the hard work out of it for you. There's nothing you need to calculate on a tick-by-tick basis. It's a color bar tool that automatically colors the bars either green or red. A series of green bars means you're in an uptrend. A series of red bars means you're in a downtrend. And this can be applied to not only the currency pairs, but stocks, futures, Bitcoin, commodities. It makes absolutely no difference. As you see here in this Canadian dollar example, the beauty of the PET-D is that it tells you which direction you should be trading. All right, now once you know the direction, you can apply any strategy in any method to that direction. Do you see here how we had some down days? This was a down day, this was down, but then closed up a little, then more down days. The PET-D continued to color these bars green, even though they were down. That's telling you that this may be some high probability areas to buy here on the low, because it's telling you the market still wants to go higher. You see, the PET-D is a translator. It's simply translating what the market wants to do at that moment. It can be either to the upside, or as you see here in this older example of the euro dollar, to the downside. All right. Once you know the direction, it's simple just to trade in sync with that short-term direction. Now, we call it the short-term trending tool, but at the same time, you can also apply the PET-D to longer-term trends. This is a current chart of the British pound, but these are monthly bars. All right, these monthly bars going back 5 years up until now. Now, as we see, we had a lot of, ebbing and flowing in this British pound monthly chart. From 2013 to 2014, we went up, and then from 2014 to 17, for 3 years, we went down. From 1 year, from 17 to 18, we went up again, and then currently, on a monthly basis, we're going down. So these are the large swings and the large occurrence of the market on a monthly time frame. These can help a lot of traders, find out what they want to do on the shorter time frame if they're in sync with the overall time frame. Wouldn't there be a way, though, that could help us know, not so much in advance, but at least know when we're in sync with a longer term trend in place? Well, sure, you apply the PET-D and see how when we were going up, the bars were colored green, and how they were green well in advance, and how they turned red well in advance of the strong downtrend, and how they started turning green in advance of the uptrend, and now how they started to turn red. So for the overall trend right now, the British pound is in a strong downtrend according to the PET-D. Remember, once again, we're going to give you all this and much more included in 6 weeks of intensive training that's going to be coming from yours truly. You're going to get 2 strategies, the PET-D. We're going to go into detail how you can apply all this simply and easily on our platform, and then we're going to show you the advanced trade management and put it all together. This is 6 weeks of great information that I learned that I use in my daily trading as well. Now, if you go to my website, Specialist Trading, or to Pro Trader Strategies, you'll see all the testimonials from our last colleges, how people have been trading for years and how they never were consistent, but for the first time they become consistent trading our methods and techniques and strategies. So let's recap before we go into the question and answer portion. Remember, 6 full weeks of trading tools and techniques. We're going to give you 2 of our best strategies in terms of consistency. You're going to learn all the stop placements, the exits, and the profit targets. You'll get to be able to trade this conservatively or aggressively. Remember, it's up to you so that you can be in charge of your trading. As extra added bonuses, we're throwing in the advanced trading management and the PET-D and 41 years of trading experience. Okay, this is not just something that's going to come to you in an online class and that you're going to say, gosh, well, I have some questions on how to really apply this. These are all live classes for the most part, and you're going to be able to talk to me live and ask me questions. And you can also correspond with me once the classes have concluded. Remember, as my mentors taught me, successful trading should be non-subjective, should be consistent, should be as simple as possible, and most importantly, should make you a part of the process. All of these categories are included in our 6-week college. So ask yourself, isn't it about time you stepped up and took advantage of all this information and started to become a consistent trader? Well, we have a great discount for all the attendees today that are interested in becoming a student of mine in our college. We're going to give you all these things included, instant access, but we're not going to stop there. You're going to get a great discount. Usually the complete Forex class runs roughly about $5,000. We're not going to charge you that. In fact, we're going to discount this, I would say, 20% discount. We're going to take 20% off that. So the early bird price is only $39.95. Now, for those of you who we still know that this is a large sum to come up with, don't worry, we will include payment plans. So if for any reason you want to just put down a small sum and a small deposit, you can still be up and running and still be in the class and have some monthly payments included. But we're not going to stop there. We're also going to throw in 1 year of the platform. This is for a limited time only. You're going to get a free year of our platform. So everything is one click away. You'll be able to learn on site with the platform and see the same signals that I'm getting 1 click away, and you'll be able to learn it easily by applying this. You'll see how much this really helps. So this is a great offer. Cutting the price 20%. We're including payment plans, so you don't have to come up with that one lump sum. You can come up with a small deposit and still be in the classes when they begin. And we're giving you 1 year of our platform. All the examples you saw today, all the signals were generated using the PTS Primo Charting Platform. Remember, this is the educational portal that makes Forex trading simple. You really need this to be in line with the way we trade, because I use this on a daily basis for checking my signals and for seeing what is out there on the Forex markets. So here's how to take advantage of this great offer. Contact Pro Trader Strategies. I developed the platform with them. They handle all of the marketing and the discounts and the payment plans with the colleges. So you can either email them. I would suggest calling them up directly. They have trading consultants manning the phones. They would be happy to discuss a payment plan with you or give you different discount options, plus tell you more about the platform. You can call them directly at area code 310-598-6677. That link below will take you to the sign-up page. We'll also give you more information about our online trading college, but it's not a live link. You'd have to copy and paste that onto your browser. But if you look in the chat box, a live link has been posted. You can simply click that on, and it will take you to that page, okay? So we've come to the conclusion of the class today. I want to thank you for holding off on any questions. And if you do have a question right now, please feel free to type it in to the question and answer box, and I would be happy to answer it. Remember, we're at the end of just about at the end of 2018. I often state this. Most traders, when we start a new year, have all these hopes and dreams of where they want to be by the end of the year. And I would venture to say that the majority of them, probably 80 to 85%, never meet those goals. Isn't it about time you took charge of your own trading? This is what we do in the college. This is going to be live interaction with myself, and we keep the classes to a minimum. We don't want to have 200-300 people in a live class. We'd like to keep it down to a small number so that it can be more intimate and you can feel free to ask questions as many as you'd like. So this is what we do. Some people are asking, what are the platforms? Are there other platforms you can apply this to? Yes. All of our methods and techniques can easily be applied on other platforms, but the beauty is you're going to get a free PTS Primo Charting Platform, and it's going to meet all your needs. So why would you want to use anything else? You can toggle back and forth between TradeStation or Metastock or MT4, and you can simply see where the signals are and all the PET D, colorations and everything right there in front of you. So yeah, that's a good question. But remember, the platform really, in my opinion, we designed it to make it simple so that you wouldn't have to feel that you have to understand how to use it on a different platform. It's all right there. It's one click away. And also one thing we didn't mention is that you can scan. The platform allows you to scan for nightly setups. So in another presentation, probably in the following weeks, I'll show you how you can scan for those nightly Forex setups. And it makes it so simple to know what the setups are the next day in advance, okay? Anyway, as we conclude here, I hope you got something out of this. We gave you some 3 rules here that will really increase your odds for consistency and how they make up one of our most consistent strategies to date. Go out and test them for yourself. These are the basic core of strategy number 4. And if you see that they really do show signs of some nice setups, then you owe it to yourself to become a member of this course, because that's just the tip of the iceberg. There's just tons more of information that I've learned in my 4 decades of trading that I can share with you and I can teach you so that you can take your trading to the next level. Remember, that's who you contact, Pro Trader Strategies. Call them right now. There's absolutely no obligation. They would be happy to answer any question you have, and they would be happy to construct a payment plan with you if you're interested in becoming a student of mine. As we close here, I want to say thank you so much for attending today. Remember to paper trade those 3 rules, and if you really see that there is a lot of consistency behind them, please take advantage of this great offer before it's gone. This is the early bird special, a discount of 20%, plus a payment plan if you choose to do so, plus you'll also get 1 year of the platform, okay? As we conclude here, I want to say thank you so much for attending today. I wish you the best of luck in trading, and I look forward to all of you becoming students of mine in the new Elite Forex Trading College. Thank you so much. I'll see you next time. Bye-bye.